Microsoft and why it's fantastic. Hello, everybody. This is StockerFinance, and I'm your host, David Scheuer. Make sure to follow me on Twitter at StockerFinance for more. All right, so Microsoft recently passed $200 a share. This is incredible because Microsoft is now worth 1.52 trillion US dollars. It has a PE ratio of 33, a dividend yield of 1%, which is not too bad, a 52-week high, which is what just happened today, over $200, and a 52-week low of $130. Now, Microsoft has been through a lot. It's actually a fairly aged company now, and it's been through a lot. If you look at the 5-year max, it's up 342%, and it's one of the best growth companies. It's survived recessions, it survived the 2001 tech bubble, the 2008 crisis. Now it's just dominated during the whole pandemic situation here. And it's just been an incredible growth stock. To date, when it was first founded, it's up over like 200,000%, some absurd number like that. And since the peak of the 2008 financial crisis, which I don't mean the peak of the bottom, I don't mean the very bottom, I mean the top before it happened, it's up around 500%. So it's just an outstanding growth company. And today I'm just going to talk about why I still think it has room to grow, why it's succeeding, why it's dominating, and why I think it's just a great stock in general to add to someone's portfolio. So here's a quick little summary here. Steady growth. It's an established company. It's been through wars, as I said, recessions, etc. It grows steadily and has a decent dividend. Has excellent financials. It's extremely profitable. Has great margins. The revenue continues to grow, and the earnings it beats them pretty much every time. It's adapting and innovative as well, which is important for these large companies. When you get this big as a company, it can be hard to maneuver and change. Whenever this little, it's kind of like driving a little motorcycle and then driving a semi truck. It's a lot easier when you're on a little motorcycle as a small company to just zoom around, go through things, adapt really quickly to the markets. But as a big company, it takes a lot more to change. But Microsoft's done very well at maneuvering that semi truck, quote unquote. I hope that analogy sort of worked for you guys. And they laid off the media team and have replaced them with AI, which is a great example of how they're innovating. Obviously, there's different feelings on AI replacing jobs. It's not necessarily the best thing, but it's also, for a company and for shareholders, it's great. Number 4, it's not being targeted by the media/people like Amazon is, which I'll touch on a bit. And then again, just AI capabilities and future innovations like augmented reality and virtual reality. So first off, let's go over the financials. And I am using Hypercharts here. This is hypercharts.co. It's created or co-founded by Gally over at Hyperchange. Go check out his YouTube channel. It's fantastic. So first off, let's look at the revenue segments. We have more personal computing, productivity and business processes, and intelligent cloud. Now, one interesting thing about Microsoft's revenue segments is unlike most companies, it's pretty much split evenly between these 3 revenue segments. Usually a company will have one revenue segment largely dominate the rest of them, but Microsoft is actually fairly diversified between the 3 here. And as you can tell, it's been growing extremely steadily. Its growth just keeps on chugging. It's pretty incredible. So now let's look at the net income, which as well just keeps on chugging. We can go ahead and look at the margins, which are increasing. And I think this has to do with AI, cloud computing, just stuff that is a high margin business. And so it's actually nearing, their gross margin is nearing 70%. We're seeing the profit margin kind of around 30%, and it's been growing slightly. And same with their operating margin, which is more around 40%. Now, their operating expenses have been increasing as well as the company grows. But one interesting thing here is general and administrative is actually a very small cost. And they have 144,000 employees. So I'd expect that to be a much bigger operating expense. But rather, it's research and development, which is a significant chunk of it, and then sales and marketing. So it's about 50-50 between sales and marketing and R&D. Now, sales and marketing makes sense. You got to advertise, you got to sell your products. And research and development is interesting because, well, if you're spending that much, I mean, nearly over $4 billion, around $5 billion on research and development each quarter, what are you doing? What are they creating? And I think I'm going to get into that in a little bit later, but I think they're going to be entering into some new markets, creating some new products, and that's one of the reasons for this massive research and development cost there. So the next step is growth here. And as you can tell, just growing steadily, revenue year over year, and same with operating expenses. We kind of already looked at this. All right, and now earnings. This is just to show you that Microsoft pretty much consistently beats earnings. It has not lost or missed earnings since Q1 2019. Now, Q2 2019, it could have missed it right there just based off this chart. I'll have to look at the specifics there. But it looks like it's pretty much even. So as far as I'm concerned, it has completely beat earnings since Q1 2019 and probably before that as well in a row, which is pretty outstanding. Let's look at the next one. So the pandemic also helped Microsoft completely. I mean, substantially. We had Microsoft Teams, which succeeded a lot. We had more people using computers in general, more gaming, just more people online. A lot of the social media companies like Snapchat saw an increase in usage of up to 20% or up to 40%, which is incredible during this time. So for the people just online in general, it's going to be increasing. More people are using personal computers, buying personal computers, needing to use Microsoft Office, needing to use different software programs, and more people are playing gaming, which has to do with cloud computing, etc. So it's pretty interesting. I think the pandemic has just not only accelerated Microsoft's growth this year, but just has really pushed them to the next level. Now I'm going to talk about a couple little analyst reports here. So there's just one that has to do with growth, and how Microsoft is just accelerating its growth and really just doing very well. And there's another one right after this that I'm going to read to you guys, which is simply about the future price target that Microsoft could expect. Now, these are just people's opinions online. A lot of these come from just random websites like Seeking Alpha, Yahoo, The Motley Fool, etc. So I'm going to go through this really quickly, and then I'm going to give kind of my analysis and what I think about the future of Microsoft. But I really agree with them, and I like the way they rolled out these analyses of Microsoft. So the graph below summarizes my findings. Basically, you can read this on your own, but I'm just going to summarize it. Now, he's talking about migrating software to the cloud while building up the cloud infrastructure business, which is Microsoft's Azure. It does not hurt that even Microsoft's lower growth subsegments, namely Windows OEM and personal computing hardware, have been holding up fairly well. So if we look at the revenue growth acceleration ratio, Microsoft is doing significantly better than Google, Apple, Amazon, and Facebook, which, as you know, are some of the other biggest companies in the world. Now, here, Microsoft took the gold medal once again. The same trends in cloud adoption that impact sales growth are likely behind the efficiency gains, since cloud is more scalable business, with revenues in each of Microsoft's cloud services, which includes Office, Dynamics, Server, Windows Commercial, having increased by at least 15% in the most recent quarter. The opportunities for further improvement seems plentiful, and I 100% agree by this. There's going to be a lot of further improvement, which I'll again talk about a little more later as I get into my personal analysis. Your sales/employee annual 5-year growth. Again, Microsoft is exceeding that of Facebook, Amazon, Apple, and Google as well. Now, running a fast-growing, highly efficient business is not enough. Also important to me is a company's ability to turn profit and loss performance into cash in the bank. For this purpose, I looked at free cash flow to revenues. Microsoft lost to Facebook in this category, but only by a whisker. Still, a ratio of over 30% is quite impressive. Microsoft seems better at turning sales into cash than its peer Apple, traditionally known for running a very tight ship and masterly controlling its operating assets. Which it means inventory by that. So as you can tell, Facebook barely beats it by 0.3%, and then you have Amazon way down there, Apple at 24.9, and Google at 17.4. So Microsoft is just a cash machine, and that's one of the huge things you're going to see in both of these analyses, and as well in mine. It just knows how to print money. It knows how, not literally print money, but it knows how to create profit, and it knows how to have high margins, and really just manage its cash flow, which is really important for a large company like this to keep growing. So sure, Microsoft is far from being the best in this category, but swimming in a pool of cash that's 100 versus 150 feet deep does not make that much of a difference. So it's basically saying if you have $100 million with $150 million, it's not necessarily that huge of a difference. That's just basically what it's saying. Versus if you have, $1 versus someone with $20, that's a much bigger difference. So that's all it's really, that's what that comparison is. It's a little weird though. What's more important is that Microsoft has plenty of dry powder to weather whatever pandemic, recession, or doomsday scenario may come its way. The same is true of all other big tech names. And that's 100% true. This doesn't apply to all big businesses. There's plenty of businesses, like in the retail space, that were big that have just been completely obliterated by the pandemic here. But Microsoft has exceeded substantially well with Microsoft Teams, just all these online tech businesses, which now make up a significant portion of people's indexes or different index funds, as well as the market in general now, which have just been dominating and taking over. I mean, Microsoft, again, is worth $1.5 trillion, which is incredible, and Apple's just around there as well. So now I'm going to talk about this other analysis, which is a little bit different. And this is just a really interesting graph that I found on this article. And I'm going to link all these articles below if you want to check out the full things and read them for yourself. I just thought they were super interesting. So in March, information technology accounted for around 25% of the SPDR S&P 500 ETF. Today, the sector accounts for 31% of total holdings, as displayed below. So it's just showing that it's really grown substantially compared to other segments. And the pandemic has really pushed them further ahead to be at that 31% mark when it was at 25% before. So it's just pretty interesting to show that technology is growing substantially as more people are going online and needing to use their computers, working from home, etc. Rally in technology stocks and the unrecovered losses in other sectors have created possibly the biggest wealth transfer in history. The question is whether tech has more room to run. In our case, we want to examine whether Microsoft, which holds the biggest and most diverse portfolio of tech, has room to run. That's what the article would have said there. So to visualize, our expected free cash flow growth looks like this. So again, they're going back to free cash flow just to show why that's important here. And as you can tell, this is the predicted amount in billions of expected free cash flow in the future for Microsoft. So right now we're at 55 billion, and by 2026, 73.29 billion. Now the company's free cash flow for the past quarter was 13.7 billion, suggesting a run rate of about 55 billion over the next 12 months, as that previous graph showed. This figure is prudent, considering that Microsoft's free cash flow trend grows on a quarter-over-quarter basis as well. For the quarter, free cash flow growth was up 25% year over year. However, we're going to assume a much lower rate of 8% towards 2021. This is even lower than the 14.6 revenue growth, just to make sure we are not overstating assumptions. That's an important thing here. It's really important to take these conservative estimates and hope that Microsoft overperforms. That way, you're not going to be overestimating what you think. It's really easy to do that. I tend to do that a lot, so I've been trying to take more conservative estimates on companies just to show that it has large potential, but that even with this conservative estimate, it's still going to grow substantially. And so here is free cash flow over the year in billions. This is just terms of percentage growth here all the way to 2026. And here is a visualization of that same thing, of those numbers you just saw there. Sorry, I'm kind of stumbling my words. All right, so now this is just kind of a graph to show how they've come up with an intrinsic value of $258 a share. This suggests an additional upside of around 31%. Now, I don't want people to pay attention to this too much, but this article just stated it, so I wanted to show it. I just think it's really interesting to show how they calculated this upside, so you guys could do this own calculation in other companies if you'd like. I'm just kind of showing this as an example, but again, intrinsic values are really hard to value. You can put an intrinsic value on a company, and look, it has 31% upside. That's great, but it's really hard to tell because no one can read the future and what's going to happen. So just take this with a grain of salt. Don't say, oh, I'm going to buy Microsoft now because it's going to go up 30%. Well, it might go up 30%, but let's give some other reasons for the technology and why this might be true besides just these calculations here and just by looking at the financials. I think there's other things to look at as well. So, first off, I want to look at AI. Microsoft lays off journalists to replace them with AI. This is a recent article that just came out. Now, The Guardian reported that around 27 are being let go in the UK after Microsoft decided to stop employing humans to curate articles on its homepages, who can have AI autonomously generate news articles, which is pretty incredible that we're in that time period all now. Now, it says Microsoft revealed it had more than 800 editors working from 50 locations around the world. So I'm going to do some calculations later to show you, or in a bit, to show you how much money Microsoft saved on these 27 being let go potentially, as well as the 800 or even more that it could let go in the future. Now, jobs lost always sucks, but as shareholders, as part owners in Microsoft, it's important, profitability is one of our main goals, and we want Microsoft to grow. So AI is important to us, even though it sucks that these people lost their jobs. I just want to recognize that it does suck they lost their jobs, but it's also great for innovation and for Microsoft to grow as a company. So Microsoft margins will increase with AI. Now, profit margins will increase as more workers are replaced with AI. That should be pretty obvious to everyone. Now, some example calculations here. If, let's say, those 27 people that were laid off had an average salary of $50,000 a year, that would be $1.35 million a year in savings for Microsoft, which means they'd make an extra $1.35 million a year. Probably even more than that. You have to pay for workers' compensation insurance, a bunch of different things. So a $50,000 a year salary could be more like $60,000 a year in savings for Microsoft. And $50,000 a year working at Microsoft, to me, seems fairly low in this day and age. So it's probably significantly more in savings than this. But again, I'm trying to take a conservative estimate here. I don't want to get too ahead of myself. And it's just, even with this conservative estimate, it shows how substantial these savings by replacing people with AI are. So now they employ 144,000 people, as I said. Now, hypothetical scenario is 10,000 workers replaced by AI with an average salary of 50,000. So 50,000 US dollars times 10,000 equals $500 million in savings each year. which is pretty incredible. And that's just a hypothetical scenario to show you that even if they just replace 10,000, so to have 133,000 people still working, they would save probably more than $500 million in savings each year. So now I want to talk about Mixer. Now Mixer was kind of a social media, or not a social media, it was a streaming platform that was trying to compete with Twitch. If you play video games, if you watch live streams, you know what Mixer is. They bought Ninja, or they kind of like got they paid Ninja to only stream on Mixer, but the problem was none of his fans really followed over. It just was kind of a failure in general. They just didn't have the viewership that Twitch did. People just were so loyal to Twitch, as well as YouTube has really been dominating the streaming market. But now, read that middle article there, or at least any of these, really, the top two. Microsoft is going to team up with Facebook to create a new streaming service, or at least that's, I think, what they're going to do. But they're closing their service, the Mixer service, which is that, yeah, it was just kind of a weird, it didn't work out very well for Microsoft, to say the least. Now, I like this about Microsoft because it means they're cutting their losses. And they're also not afraid to try again. So they're cutting their losses on Mixer, saying, okay, that didn't work, but it's still a huge market. The streaming market is still massive. So how do they penetrate that market? Or they're going to take a different route, which I think is actually a significantly better route to take. So they failed. The main problem with Mixer is they failed to have the fan base carry over from other platforms. Even by paying large celebrities and people and streamers to go solely on Mixer and only stream there, their fan base just did not carry over at all. And, you know, Ninja's viewership was significantly down compared to what it was on Twitch. Now, I think teaming up with Facebook is actually a great move because no one really knows this, or not many people know this, but Facebook actually dominates YouTube for video content in terms of viewership. It is ridiculous how many views Facebook videos get. It's ridiculous. YouTube currently has a monopoly on the video market aside from Facebook, but just when people upload videos to Facebook, it is just incredible. And I say YouTube has a monopoly on the video market because it's solely a video platform, whereas Facebook is a social media platform. But if you just do videos on Facebook versus videos on YouTube, the viewership on Facebook is immense. Now, Microsoft has Azure and other software capabilities, and Facebook has the viewership and monetization capability. So together, I actually think they make a great combo for potential streaming service or something of, some video content service there, whatever it may be. But I think it is going to be a streaming service again. Also, where is Microsoft going in the future? What is the potential of Microsoft in the future? You saw that random intrinsic value analysis, which sort of made sense with the free cash flow growing, etc. And I showed you those two analyses, but now let's just show you the potential market value of these different industries that Microsoft is starting to just get into. So first off, the streaming industry, as I just went over. The global video streaming market size was valued at $38.56 billion in 2018 and is projected to reach $149.34 billion by 2026, which is incredible. That's an incredible 18.3% growth from 2019 to 2026. I mean, that is pretty crazy. I don't mean from 2019 to 26. That's yearly, but it's that's a pretty crazy return there, to say the least. So now AI, and it just shows how big the streaming industry, and it shows why Microsoft is trying to get into the streaming industry so badly. So now let's talk about AI. Now this is hard to calculate because the potential of AI is just massive. I think most people who have been following OpenAI or who listen to podcasts about AI or who are computer engineering majors, etc., know the potential of AI and know it's just, the market potential for it is just immense. But I think I'm just going to go with conservative estimates here specifically for Microsoft. So improving profit margins, cutting labor where they can. Now, Kai-Fu Lee, who I hope I'm pronouncing that right, sorry if I'm not, she's an AI expert, and they believe that 40% of jobs will be replaced by AI in the future. But I'm going to go conservative for Microsoft and say just 5% in the nearest future are going to be replaced. So just 5% of Microsoft's workforce, which to me would be pretty, it could definitely happen in the near future, which means the next few years. So that would be 144,000 times 5%, which equals 7,200 jobs replaced by AI. Now, again, if we use just a $50,000 salary, that's a $360 million savings potential. And to be honest, it's significantly more than that, just in terms of workers' compensation insurance, their benefits that Microsoft's not having to pay out. just all the other stuff, and the fact that the salaries of these people are, the average is most likely significantly higher than 50,000. So yeah, it's definitely more than that, but we're just going conservative just to show you that they could save, close to $500 million by replacing people with AI. And that's just 5% of their workforce. Now, cloud computing currently is $266.4 billion market, but it's expected to grow to $354.6 billion by 2022, which is very, very soon. Now, VR and AR, this is something I just want to briefly touch on. So, Microsoft has sort of kind of dabbled in the augmented reality space as well as the virtual reality space. But the global augmented and virtual reality market size was actually 11.35 billion in 2017, which is pretty massive. I didn't really expect it to be this large. And the augmented reality, virtual reality market forecast is projected to reach 571.42 billion by 2025. Growing at a CAGR of, sorry, I like to just say CAGR, I think it sounds kind of funny, of 63.3% from 2018 to 2025. That is an immense growth there for augmented reality and virtual reality. And if Microsoft can take even just a slice of that pie, and it definitely has the resources, as we saw by the amount, or just the immense amount of research and development it was doing. I think a lot of the research and development is going into the streaming industry. It's going into AI, cloud computing. I think it's going into all these. But I think VR and AR, even if they just invested a few billion or just even a few million into researching that, it could be an immense return for them and be extremely profitable if they release some products in that space in the near future. Now, internet penetration is also only at 59% in the world, which means there's still 40% of the world that's not connected to the internet. So as more and more people become connected to the internet throughout the world, Microsoft is going to directly benefit from that. The population is also expected to grow to 10.9 billion. And as there's more people are using the internet, then Microsoft's going to benefit from that as well. So the steady growth that Microsoft's been experiencing and improving margins by replacing people with AI, by getting into cloud computing, the streaming industry, and the VR and AR markets, it has a lot of room to grow in the future. Even though it's at a $1.5 trillion market cap, it could still go. It's definitely not finished yet, and we're going to see Microsoft continue to steadily grow in the future as it's done years past. So I also just want to show here, this is just the markets it's kind of just the number I just threw out. This is just to show the revenue forecast in billions of dollars for cloud computing. So now, where is Microsoft going in the future? Again, just talked about this. Sorry about that. Microsoft doesn't face the same backlash. This is an interesting topic. So Microsoft, if you know Amazon, if you've been watching the news or politics, especially if you watch the Democratic debates, there's a lot of different candidates and a lot of politicians attacking directly Amazon, Google, and Facebook. And just a lot of big companies. They've threatened to split them up. They've bashed their ethics and conditions. Whatever the reason may be, they've been attacking them. And, sometimes it's justified, sometimes it's confusing. Whatever your opinion on it may be, they're facing a lot of backlash. And that, well, it'll hurt the stock price. It can hurt the company if, politics aren't on their side. If regulations are passed that hurt those companies, it can definitely hurt the stock price there and the company's fundamentals or just the business overall. But the interesting thing here is that Microsoft has largely gone unnoticed. It's faced hardly any backlash. And I think partly that has to do with Bill Gates' philanthropic journey, which has helped the image of Microsoft, even though he's not really actually connected to Microsoft anymore. I think he's still associated with it, and maybe this philanthropic journey that he's gone on has somewhat helped the image and kind of kept people out of targeting Microsoft. You just don't see people targeting Microsoft despite it being the first or second largest company in the world, depending on the day when it's competing with Apple on that market cap. And interesting, if we look at some data here, this is Google Analytics, and it's the search for these companies. So obviously Amazon's going to be higher because people shop on Amazon significantly more. They go to their website more. But it just shows here that almost no one has looked up Microsoft because, well, it's just not in the news as much. It's not there at all. Apple's there, Facebook's there, Google, and Amazon. Now, a lot of this is skewed because Google's a search engine, so people need to look up Google to do that. Apple's up there because it releases new products, has big press releases. It's really popular within the media and within pop culture. And Amazon is also just a shopping center, a huge e-commerce center. And Facebook, well, it's a social media platform. So more people are looking up these terms. But it's interesting that Microsoft is so far down on the graph there. It looks like it's just touching the bottom because Well, it's just not in the media, it's not in the news, and it really flies under everyone's radar, despite it being the biggest company in the world, or at least one of the biggest companies in the world, depending on the day, since these companies fluctuate. Their market caps tend to fluctuate back and forth between Apple or Microsoft being the largest company in the world. So, anyways, thanks for watching, and please subscribe. Also, check out these videos and follow StockerFinance on Twitter for more. If you want to help this channel, please give it a like and subscribe. I'm really trying to hit 1,000 subscribers before the end of summer. I'm going to be releasing a video on Wednesday as well as Friday, so stay tuned for that. I'm going to get that schedule going. Anyways, this is StockerFinance. I hope you enjoyed this video, and I'll see you guys in the next video. Peace out.